Good morning. It's Saturday, the 28th of March, and this is my outlook for the week commencing 30th of March. Okay, so I'm going to start with bond yields. Not really something that usually is particularly interesting, but obviously right now they're climbing fast. In the UK in particular, well, across the board really. They started to spike on the invasion of Iran, and this just puts pressure on everything from stocks to people's mortgages. So as of late March, in the US, the 10-year is sitting around 4.4%, up from 4% just a few weeks ago. And yeah, inflation fears are real, right? In the UK in particular, the UK is very prone to gas imports and is subject to a lot of inflationary pressures right now. So higher prices at the pump mean businesses are paying more for fuel and shipping, and that pushes costs up. Bond traders are dumping treasuries and they're driving yields higher. And no one's looking to buy safe debt when inflation's back in play. I mean, we only need to look at oil, right? So almost back up at 100 now. And even if war fears subside, these inflationary pressures are going to stick around for a while. I don't think they're going to subside anytime soon. We're talking about months and possibly years of persistent higher prices, which, as I say, just puts a lot of pressure on risk. I mean, normally wars make bonds rally as a safe haven, but with obviously oil in play here, growth is slowing. Everyone's worried that the Fed can't cut anymore, and may even have to hike if things get ugly, and that just kills liquidity for risk assets. So stocks, tech, crypto, all going to suffer. And higher borrowing costs obviously also mean that companies cut back on spending. That just all harms valuations. So over the past few weeks, Nasdaq has finally started to break down. If you've been watching these streams, I mean, it shouldn't come as a surprise anyway. It's kind of been quite obvious, I think, and quite well telegraphed. But if you've been watching these streams, we talked about this exact scenario. So 7 months of consolidation here, followed by 7 weeks of compression at this high time frame composite low. Finally broke down a couple of weeks ago. We got a rally from this previous composite level, gave a bearish retest here, and we've now traded into this composite low. So potentially finding a bit of support here. But the bottom line really is, I think cash is king right now, right? Yes, there may be some short-term opportunities to the upside in terms of short squeezes, but cash and short-term bonds are probably your friend right now. The only thing bulls have on their side is that there is a possibility of an overreaction here if the war just gets resolved very quickly, but it doesn't seem very likely right now. So, in terms of Nasdaq, we may well see a bounce off this level, but overall, I think we're in the early stages of a downtrend given the duration of this range. Right, the longer the compression, the longer the expansion, or the bigger the expansion. So I don't think it's wise to be looking to position into stocks for anything more than short-term bounces for the foreseeable future. I mean, if we talked about this last time, but Nasdaq obviously trading back inside now previous year's value, so a lot of compression at value highs. So we've got to anticipate VWAP as the next destination, which would kind of take us into these previous highs, and then possibly rotation throughout 2025's value towards this 20k area, which would mean we're about a third of the way through this correction, if we want to call it a correction. Possibly, we could possibly trade into this 20k area, which I think would be a decent area to potentially look to buy. Although who knows, we're on the brink of something quite serious, I think. So I don't want to be too sort of predictive about where we might end up. This could go on for longer and be much worse than we think. I don't really see a scenario where it's better than most think. I think the market has been quite complacent up to this point, and it's just finally starting to price things in correctly. But yeah, VWAP and this 20k area would be the areas I would look for. Potentially, some short-term bounces on the way, such as from where we are now, we're trading at decent area of support in terms of that composite level and this quarterly value low as well. Okay, so that's Nasdaq done. Let's move on to Bitcoin. All right, so this week, so initially we had this headline-driven move on Monday into value highs, started to compress here, right, correctly called this move back in to fill out the double distribution. So there's a good long here on Tuesday, back into value highs again. Now I was thinking there's a possibility if we put another leg higher in here, potentially take out this high and trade into the 90-day VWAP, having been capped at yearly previously. Obviously, we failed above those highs and it was pretty straightforward short in the end, just tagging into this imbalance, then reaccepting within both the multi-week range, I think this is more than 7 weeks, and this local 2.5-day composite, which we formed here. So took the short here. Traded into our composite value lows, a lot of shorting into this area, and they've been mostly squeezed out on this leg up today. So what now? I mean, personally, I think this range is probably ready to break to the downside with all the things going on that I've just described. We're obviously trading now back below the developing months value and the developing weeks value as things stand, but having been rotational within the developing month up to the end of the month, now trading below it suggests that we are becoming imbalanced down and therefore, potentially ready to trend to the downside. So if I just go back to VWAP here, we can quite easily visualize the strength of the market. So, oops, wrong one. If we take the monthly, so we've been rotational within February's value for all of March, just oscillating around the extremes of value. March has been very neutral up to this point. Now breaking down from value is now obviously making that bearish shift. So I would anticipate this area around sort of 68k to potentially act as resistance now. These previous lows, right, we confirmed monthly value low support here briefly. So I think that a move into fill out this imbalance up towards the developing months value low is potentially where I would look for BTC to make a lower high and potentially to get back into a directional short from. The way I'm positioned right now is short from 72.1, I want to say. Let's come back here. 71.1. Having failed above those highs, took the short here. And then I hedged long on Friday, a little bit too early, but in any case, we held composite lows of support, and I'm looking to hold that hedge in towards this area on monthly val, as I say. So that's essentially how I'm looking to play it. I think, I am anticipating a breakdown. It is preemptive to do that, but I think it's reasonable to do so, given that we've had this big failure above the highs, reacceptance within, and now a shift below the developing months value. Everything points towards this breaking down. So looking to ride this short down towards at least this naked quarterly value low, assuming the range breaks to the downside. That is the next level of untested support. Obviously, we've tested this composite low, which aligned with a quarterly VWAP, and below that, we've got 2024's value low. So looking for at least this level, and then beyond that, we have to see. Obviously, it's going to be very flow dependent. We could see big acceleration like this, and that's really what I would be looking for to make another sort of longer term low. If we get big puke and acceleration into a contextual level, as we did in February. Okay, so in terms of plans into this week, it's pretty simple. I'm looking for rejection here around this developing months value low, and to trade that down towards 56k. So the way I'll do it was just to essentially release my hedge into that level, anticipating breakdown. Unless we can get back above the POC, I think that's by far the most likely scenario. So I would kind of have this as a line in the sand. If we accept back above 69k, then we're probably going to trade up, but really that doesn't look very likely to me right now. So I think that's it for Bitcoin. I think it's pretty straightforward, isn't it? So it's been quite a good range to trade. I think quite proud of how I traded this range for the most part. A couple of frustrating ones I missed out on, such as the headline pump on Monday, where we tested monthly value low here. So we talked around it a bit, and then we got this wick into monthly value low right here. I took profit here. We got a retrace and then the headline. But yeah, overall traded it pretty well, so can't really complain too much about it. But yeah, potentially into this imbalance, right? Just wick slightly above the developing month's value low, and then if we fail to find acceptance there, I think that would signal that the market is imbalanced down against March's value and therefore likely to trade lower. I mean, there is a possibility that we continue to range for longer. I just think that it's ready to break, particularly if stocks continue their downtrend. So, I mean, there is an imbalance here around the previous month value low, but we have tested that, right? So we tested that in early March here. And so I think, given that there aren't any naked, untested levels, and we've been consolidating all this time at the developing years value low, I mean, this is essentially high time frame consolidation at the developing years value low, I think it's probably ready to break. So just looking at market dynamics against long-term VWAPs, right, all of this is just consolidation at the extreme of the developing years value, and therefore I think we're very close to going imbalance down on the year again, as we did here, and look what happened, right? We just nuked. So I think 56k, then 2024's val and potentially lower are the levels that I would watch. Overall, I think that the next range is probably where we start to form accumulation. It's too early to say for sure. I think this is almost certainly distribution, for all the reasons we've just described. I think probably the next range we form is where we start to form accumulation, and probably we get some sweeps of the lows in that instance. I would love to buy sub 50k if we get that opportunity, but these are the next levels to the downside in terms of BTC. Okay, so that's just about it for Bitcoin, I think. Really don't see any reason to be bullish on this market. We obviously failed to hold above all of our rolling VWAPs. The high time frame trend is clearly very much to the downside. 90-day pointing down, 365-day pointing down, rolling from the top pointing down. And this was all the mean reversion towards those levels that we could muster. Right? Big failed auction, reaccepting within value. So I think this is almost certainly ready to break. Okay, that's it for Bitcoin. Other majors, I mean, ETH has been a little bit trickier, I think, in many ways. Obviously, a much bigger displacement away from value here in the middle of March. We came all the way up into the 90-day, deviating the yearly VWAP. Good level to short there, but yeah, a bit of chop around value highs. Our sort of range highs have been a bit higher in practice than value, which is what's made it a little bit trickier for us profile traders, I suppose. But yeah, our range highs have sat around sort of 2200, whereas the value highs of this range have been closer to 2100. So yeah, a couple of deviations of value, but now obviously reaccepting within, and then unable to get back above here on Thursday, having got back within the range here. So I was thinking around this area actually might be the spot to short for ETH. Maybe it spikes higher, maybe it comes up to 2100 again and retests value highs. We do have a nice imbalance there as well. But we'll see how it plays. I think that's probably 7 weeks, isn't it? Should we just check that? Don't have my shortcuts anymore. Sometimes I wonder what TradingView is up to. Yeah, 7 weeks. Okay, so at some resistance here, I was thinking this could be the lower high, but I think BTC has got a bit higher to go. So maybe we get a squeeze up into 2100 or something like that. We'll see. That's it for those two. I'm in a Sol short as well. Took it on Thursday. Obviously reaccepted within the range, having failed to hold within this old 3-week composite. So again, just compressing here now, but would probably expect an imbalance pullback again against monthly val, similar to BTC. This 85 to 86 area is probably where I would look to release my hedge and potentially write this down for an expansive leg to the downside. I mean, in terms of Sol, clearly again, very strong downtrend, right? 90-day pointing down, 365-day pointing down, and everything else really pointing down now as well, failing to hold above this shorter term VWAPs being the 7 and 30 days. So, again, expecting another leg to the downside. We've obviously been consolidating at this level of support, being this previous low volume node. To the downside, this sort of 50 to 60 area is interesting, where we've got this previous balance. So I think pretty big legs down is probably still to come, and beyond that we'll have to see. But yeah, this 50 area been quite important historically, and we have this previous consolidation. So I'd expect us to find some support in this area, in the most likely scenario, potentially coming to fill out this imbalance even lower. But again, yeah, looks horrendous. Obviously, very, very long-term range here, and we've broken down from that. So yeah, this is just a short-term consolidation before we continue to the downside, in my opinion. Hype's been a little bit trickier to trade to the downside, still, showing a bit of resilience, but I think having traded into previous year's value high and previous quarter's value high, huge area of resistance. I still think that's probably the top end. Today we traded into this developing composite high, previous week's VWAP capping it for now, on quite a lot of fresh positioning. So, this is possibly a good area to short. I'm not going to do it personally. I think there are just easier shorts out there. Still pretty well bid. Although, yeah, spot books are more skewed to the offer, a 10% delta away from price. But yeah, not a bad area to short. Open interest obviously getting quite extended on this leg higher today, and moving into a bit of bearish depth on the spot side, but still well bid overall. So we'll see. I think, obviously if everything's going to suffer, I don't think Hype's immune to suffering, even though it has been more resilient and obviously performed well year to date. I just think there are easier shorts. It's still, in an uptrend really. So for that reason, I just prefer to short other things rather than, shorting an asset which may mean revert but still remain in an uptrend. I'd rather short things which are just in clear downtrends, like Sol and ETH, for example. But this 35 area is going to be important, I think. So potentially an area to bid. It's obviously only sort of 15% away from price. If BTC is going to dump 20%, let's say, then does this area hold? Possibly. We've got all these previous highs where it found resistance around this 35 area, and in balance, the 30-day VWAP and the developing year's value high. So if it's going to sustain this uptrend, I really think it needs to hold this kind of 35 region. Otherwise, it could be in more trouble and potentially trade back, into the 20s. But we'll see. I think that just about sums it up for now. I mean, I don't think it's particularly controversial. My only doubt really over the past few weeks was whether, we come and test this previous composite. We more or less did, but whether we get some kind of failed attempt to reclaim it. I didn't think we were going to trade to sort of 80k, but yeah, I thought we could potentially come into the high 70s, but that doesn't look so likely now on the basis of everything that's happened over the past few weeks. So just really looking for a bear flag and lower high around 68k, assuming we can obviously get above the developing week's value low, which we've been capped at so far. But I think that just about sums it up. So probably leave it there for today, guys. Yeah, I'll probably throw up an offer for the jungle for Easter. And we'll see if you're already in, as most of you probably are. If you're watching this, then that won't apply. But yeah, I'll probably throw up a joining offer for Easter. And we'll see how next week plays out. But it's not looking good. I mean, it's just not. I don't think it's sensible to be a contrarian in these situations. I think this is going to be probably worse than most people think. Anyway, we'll leave it there for now. And